Charlie Munger was recently interviewed by Yahoo Finance on his thoughts on a variety of subjects. What I personally found interesting were his comments on inflation and the potential dangers that he sees for both our portfolios and for society. I think his comments are very important, and so that's what we're going to be covering in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? And it comes of no surprise to anyone that inflation has been on a one-way track upwards, reaching as high as 7.5% year over year in January of 2022. People like Mohammed Aliran have openly commented that the Federal Reserve is behind the curve on dealing with inflation and has to act strongly to gain back control of the narrative before it gets out of control. And Goldman Sachs came out and stated that they expect to see the Fed hiking interest rates 7 times in 2022, which, if they're all up 25 basis point hikes, means that Goldman Sachs expects an increase of 1.75%. Now, personally, I would bet that that doesn't happen all in 1 year. In fact, I think we may likely only see rate increases of approximately 75 basis points to 100 basis points in 2022. But it doesn't matter what I think. That's not what you came here for. The interviewer chatting with Charlie Munger asked him about his thoughts on inflation. Here he is.
I mentioned inflation, Charlie, and the stock market is down a bit this year, maybe because of inflation. Also, the tensions in Russia and Ukraine. Maybe we'll get to that in a second. But I want to ask you specifically about inflation. Are we looking at a prolonged decline in the markets because of inflation? Is inflation on the rise? And should we be concerned about it?
Well, let me take that in the reverse order. Inflation is a very serious subject. You can argue it's the way democracies die. When democracy dies in Latin America, inflation is a big part of it. So it's a huge danger once you've got a populace that learns it can vote itself money. If you overdo it too much, you ruin your civilization a lot. And so, of course, it's a big, long-range danger.
Now, of course, when you hear that, you would almost think that, yeah, maybe inflation would be a danger to smaller countries, but surely a global superpower would be immune to such impacts, right? Well, we're starting to realize that this time may not be different in North America, and we aren't any different from past civilizations. We need to really be more concerned about inflation being a real threat. Charlie Munger went on to describe a historic nation that collapsed due just to inflation. Here's Charlie on that.
If you look at the Roman Republic, and even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-range danger we have, probably, apart from nuclear war. What brought in Hitler was the combination of the Weimar inflation, where they utterly destroyed the savings of the middle class in Germany, followed by the Great Depression. It was a 1-2 punch. And Hitler came in, crazy demagogue, with 40% of the votes, and pretty soon we had a dictator hell-bent for world war. So the history is not pleasant. And Germany was a very advanced and civilized nation, the Germany that Hitler took over.
And so I think the elephant in the room is how we as investors should be thinking about inflation. And I think the interviewer does a good job here because he specifically relates it to investments being made in growth stocks, which, as you would recall, have been the hardest hit in this environment. Here's the interviewer on that point.
Is it something investors need to be worried about, specifically when it comes to growth stocks right now?
Well, I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis.
Wow. Well, that'll be a different type of environment, won't it?
A very dangerous environment.
And the major takeaway here is that Charlie Munger is right. Inflation does have the ability to deteriorate your nation, which can lead to significant amounts of political instability and could potentially be the spark of what led to Hitler in the past. And so the obvious follow-up here is, what exactly does Charlie think about the job that the Federal Reserve has done, and what should they be doing going forward?
Going back to inflation specifically, though, Charlie, do you think the Federal Reserve is doing the right thing now or not?
Well, of course, in a modern democracy in the age of Keynes, you're going to get big government reaction. The reaction this time was bigger than it's ever been before in the history of the United States. They just threw money at the problem. And they were probably right to fear what was going to happen and to be quite liberal in throwing money at it, but they probably overdid it a little. They threw so much money so fast that it's hard for the restaurants to get people to do the work. But I don't criticize it. It's hard to make these decisions under pressure.
So overall, Charlie doesn't want to criticize them too much because he's right. These were quick decisions made under pressure in the face of something that we were just not experienced in dealing with. I personally think that the big takeaway from this interview were Charlie's thoughts on inflation and how he likened it to the second worst thing that could happen to a nation short of dropping a nuclear bomb right on top of them. And the risk of inflation is great. If you take a look at this chart that I made of Western countries and their debt to GDP, you can see that the national debt levels of many Western countries has in fact reached very high levels. You can see here that the US public debt to GDP has risen above 100%, and Canada and the UK are following closely behind, nearing 90%. Greece, Italy, Portugal, Belgium, France, and Spain are all also quite high. Some of these nations may be forced to monetize this debt, which could lead to further inflation. I have to note that we don't exactly know what would happen if these nations' debt levels continue to grow, but the best bet is that it will lead to higher levels of inflation. Also, guys, I'm not an expert here, but if we get into another economic shock, these countries are running out of tools to address those shocks. The least worst situation would probably be to monetize the debt, which of course would inflate the currency. So we are living in very interesting times, and I'm very curious to see how this all plays out. If you guys want, I can make a video discussing what types of companies to invest in an inflationary environment. Let me know in the comments if you want that video. Also, Alibaba just reported Q3 results, and I gave you a very good first look. If you missed that video, you can get to it right here.